Good evening, everyone. Let's start today's meeting. Manushri, you can start.
Yes, ma'am. Good evening, ma'am. Is my audio and video clear?
Yeah, it's clear.
Yes, ma'am. So let me start my presentation. Good evening, everyone. I'm Manushri. I'm a data engineer intern at Hackveda. So my task was to perform a technical analysis on the stock market data of HDFC Bank. So now throughout the session, I'll be discussing about the introduction, what technical analysis means, and what I've done to the stock market data which was given to me, and followed by the main concept which I was intended to learn because of this technical analysis, that is about the support and the resisting level, and then followed by the demonstration, and then the applications of this technical analysis, and then a small recap of what we have gone through. Now let's get into the presentation. What is technical analysis? So before getting into this term, I just want to ask you all a question. So who else is here in the meeting? Bhavana. So just for the sake of taking this session a little bit interactive, I just want to ask a question to Bhavana. Bhavana, are you here?
Yes.
Bhavana?
Yes, am I audible?
Yes. So in order to take the session a little bit interactive, I just want to ask you a very basic questions.
Okay.
So let's consider that your grandma has a gold jewelry, let's say a gold necklace. What might be the cost when she bought it during at her 20s or 15 of age?
It is less when compared to now.
Yeah. So can you please give approximate value?
Like maybe 1,000 rupees.
Yes. Maybe 1,000, or it might be even less than that. Can you say
Yes.
what might be the cost of the same jewelry today at today condition?
It may be 10,000.
Yeah, 10,000 or even more than that.
Yeah.
Yes. So thank you for answering. So as Bhavana said, there is a drastic change in the price of the same jewelry before 10 years or before 15 to 20 years. Whereas now there's really a very drastic change in the cost of the money. So what technical analysis is? Analyzing the data set technically, that is to predict the value of an asset based on its historical price data. So, as Bhavana said, there is a very drastic change, right, in the cost of the gold jewelry, and we can comparatively just analyze or predict what might be the cost of the jewelry in later few years after 10 to 15. So since before 10 to 20 years the cost of the jewelry was 1,000, and now the cost might be 10,000. So what might be the Bhavna, so can you say what might be the cost of the jewelry after 10 to 15 years from now? Will it be increased or decreased?
It would be increased.
Yeah, definitely. So how Bhavana was able to say the cost of the jewelry might be increased because based upon the historical price data, what we all generally know. So before 10 years, it was some amount, and now some amount plus a larger amount, that is, it had got increased. And again, after few years, the value of the asset might be increased. So based upon the price data, we are able to predict the value of the asset will be getting increased. So this is what technical analysis basically means. Based upon the historical price data, we'll be predicting the value of an asset in the future. So this is the graph of a sine graph. Now let's say that the graph is going here down, and again it's getting raised, again it's down. Now the pattern, what pattern is? It will be following the same gesture of pattern throughout the series. So based upon the pattern which is occurring in the historic price data, we'll be predicting the value of the asset in the future. So now let's see how we are going to perform this technical analysis. In simple terms, let me say data loading. So let's say that I wanted to perform technical analysis on this the gold jewelry data set. I have done the fundamentals on the HDFC stock market price, but in order to make it understand to you, let me explain it based on the simple term, that is based on the cost of the gold. Now I'll be loading the data set. The data set simply means the value of the gold throughout this past 10 years. And throughout this 10 years, the ups and downs in the values of the golden price. So this is the data set, and I'll be loading it. And after loading it, as a data engineer, what we'll be performing is we'll be preparing the data. So a data set is not necessarily always to be in perfect rows and columns. It can be of any form. So as a data engineer, what I'll be doing is I'll be preparing the data according to my view. So at which particular form will I be able to analyze the data set in a more predictive way? So I'll be preparing the data according to me so that I'll be do the performance even more better. And after preparing the data, I'll be creating the chart. So what chart means? The X and the Y axis, based on which I'll be plotting the value of the asset or the gold with means of X and the Y axis, that is basically the price with respect to the change in the years. So after creating the chart, so what a chart actually contains? It contains the changes in the value of the gold, the increase in the value of the gold, and again the decrease, that is the changes in the value of the gold, right? So this is what the chart contains. So because of this chart, I'll be able to identify the trend, whether it is an upward trend or a downward trend. So upward trend in the sense there was an increase in the value, whereas downward trend in the sense there is always a decrease. So based on what Bhavana was able to predict that the value of the asset will be increasing within 10 to 15 years from now, is there was an upward increase. That is, throughout these years, there was always an increase in the price of the gold, whereas there was no downtrend, that is, there was no decrease in the price of gold at all. So since throughout this past 10 years there was increase, there is also a chance that within this 10 years from today, there also again be the same increase. Now, after identifying the trend, support and resistance level, now I'll be finding out the support and the resistance level. Now, let me tell you what support and resistance level actually means in the coming slides, because it's a very crucial concept. And this technical analysis fundamentals task was mainly given in order to analyze the support and resistance level concept. So let me explain it more detail in the coming up slides. After finding the support and the resistance levels, I'll be performing the indicators and the oscillators. So based on the indicators and the oscillators like moving averages, what moving averages is, there are a series of pattern which consist of the same average. This basically means of moving average. Now, because of this moving average, I'll be able to find out whether the price of the asset will be increasing or decreasing. I'll be able to predict the price of the asset. So this the use of indicators and oscillators. Now, these indicators and oscillators have many techniques. One such technique is moving averages, and then followed by the pattern recognition. After pattern recognition, so again, the pattern recognition is like trend, but trends we follow the straight line pattern, whereas in pattern recognition, one such a pattern recognition is the shoulders and head, that is heads and shoulder. We say if the pattern is like this, if you see my camera, I'll be showing this heads and shoulders. So if my graph pattern is like this, increasing and then decreasing, then it is said to be heads and shoulders. And then followed by selecting the resistance level. So after finding out the resistance level, we'll be giving a final conclusion of what the value of the asset will be. Now, this is the 8 steps of technical analysis fundamentals. Now, I've just given a small snapshot of this. Now, let me say about what support and resistance level actually means. Now, it's really very good concept. That is a very important concept in the technical analysis. Now, let's say, now just look at this picture, what I'm showing here. I hope that you're able to have a look at this laser pointer. So just look at this picture. Now, these two lines are known as support and resistance. So let's say instead of considering this as a graph, just consider these two red lines as the track of an athlete. So what athletes are supposed to do? They are supposed to run within this track itself. So when they move out of this track, they are said to be out, or they are said to be a foul, or something like that, disqualify. That is, if they are out of the track, they are said to be out of the game, basically. So that's what here it actually means. When the movement of the graph is outside this track, which is technically means the support and the resistance lines, there is said to be a reversal in the trend. That is, if the graph is within the support and the resistance lines, that is the track, then the graph is in a good movement, so that the prediction will be even more stronger. But when there is a reversal trend, that is when the particular graph moves out of the line or out of the track or out of the support and the resistance line, then there is said to be a reversal trend. Now, what the support is actually means is support is ascending value. So when there is an increase of the value, when the value is always increasing and there is no chance of decreasing, then it is said to be support. And what resistance actually means is when there is a stop in the increase in the value of the price is basically known as resistance. So in the case of the gold, which we have talking about from the starting of the presentation, the value of the gold were always been increasing. So there is no point where the value of the gold has gone down. So which means that the value of the gold has always been meeting the support level where there is no drop down in the value of the gold at all. So when, let's say, consider it in the opposite manner and contrary, when there was always a fall in the price of the gold, and there was no increase at all, then that particular point is said to be resistance. I hope you people were able to understand it even more clear. Now let's get into the demonstration of the HDFC Bank. Using the HDFC Bank data set, what I've done. Is my screen visible, ma'am? Is
Yeah,
my
it's
data
visible.
So this is the stock data of the HDFC Bank, which I have taken. So it was already provided for me through the task team. So this data set basically consists of the date and the time, and the opening and the closing value of the stock market, and the increase and the decrease in the value, and the volume of what it was consisting. So this is the basic Excel. That is the data set which I've got in the form of the Excel sheet. Now let's look into my Anaconda Navigator. Is my Anaconda Navigator visible, ma'am?
Sorry,
Is my Anaconda Navigator visible, ma'am, or is it visible
only
only my
spreadsheet is visible.
Okay. Okay.
Yeah, it's visible now.
Yes, ma'am. So this is the task which I've done. So my basic technical analysis, which I've performed with my Excel data set, is here. So as a first step, what I've done is in order to prepare my data, I've imported certain of the libraries in the Python. So why I have chosen Python is it is a very simple programming language, which is even easier for the beginners to understand. So that's the reason. And also Python has many libraries ready-made form so that it is easier for us to perform analysis for data engineers to analyze and gain insights from the data set. And that's the reason why we are choosing Python. So we have imported three main libraries, that is pandas, in order to handle the data set, which consists of the rows and columns. Matplotlib. Now this Matplotlib, what it actually means is plot, as the name says, in order to visualize the data in the form of plots, we are importing this library, and NumPy is for performing the numerical operations with the data set. So after importing the three main libraries, I am doing the data loading and the pre-processing step. That is with pandas.read_CSV. I'm loading my data set, which is in the name of stock data hdfc.csv. So after loading my data set, I'm just printing it before pre-processing. So before pre-processing, it is in the form of date, open, high, close. So it is in the form of what I've shown in the Excel sheet. Now, after pre-processing, what I've done is, so pre-processing, what it generally means is the data engineer forms the data set according to his perception or according to his needs in order to perform the analysis. So what I've done here is I have just converted this entire date into my index column so that it would be easy for me to formulate the various technical analysis steps. So after pre-processing it, the data column has come to my index value. And after doing this, and here comes the support and the resistance. What I've said, support is the point where there is no decrease at all, and resistance is a point where there is no increase at all. So this is what support and resistance basically means. Now, with the help of the HDFC Bank stock price, I've just performed this support and the resistance level based upon with respect to the closing price with respect to its date. So now these red color dotted lines are the support level, that is the track where the athlete runs, which I have depicted in the presentation. So since the values are inside this track and there was no a greater trend reversal, so it is said to be that the stock price of this HDFC Bank is always at this particular trend and there is no trend reversal, which means you can rely on the stock price, historic price data in order to predict the future values. And then trend lines. Now trend line is, as I've said, downtrend and uptrend. So downtrend is nothing but the descending values and uptrend is nothing but the ascending values where there is the increase and decrease in the values. So with respect to the closing price and the date, I have performed the trend lines. So the green dots here represent the uptrend value and the red dots here represent the downtrend value. So here we can see that the value has gone to a very high peak and it has dropped down suddenly. So this is basically called as downtrend. And then followed by the chart types. Now we have lots of chart, like a line chart, bar chart, pie chart. So what I've done here is, and in the task, they have asked me to perform a line chart. So I have performed a line chart here. That is, it's based upon the closing price value. And at this particular date, the value was between 1600 to 1620. Whereas at this particular date, the closing price has gone to very peak, that is from 1600 it has gone to a peak of 1660, which is really very huge value. And because of this line chart, we will be easily be understanding the visualization of the data, then followed by the candlestick chart. So candlestick chart is nothing but this chart where the lines are represented in the form of candles. So when there's an increase, it is represented by the red color values, and when there is a decrease, they are represented by the green color candles. So it consists of the red and the green candles, which helps us in order to understand the price values, whether it has gone an increase or decrease. So yes, now let me get back into the presentation. So yes, now this is what the entire thing about the technical analysis and the demonstration part also I've shown with a simple real-time example of the stock price of the gold. Now let's see where all these technical analysis can be applied. It can be applied in the risk management when any funders or any cryptocurrency traders just wanted to make money or just wanted to know where they can face any profit, or if they are at the point of any risk, they can invest money based upon this technical analysis of the stock market, historic stock market price, and they can invest money and they can see a price so that they can avoid the any risk factors they are involved in, followed by trading and again project management. Now this project management is a little bit very interesting. Apart from this, since we have always getting into the stock market values, project management is very different from that. We'll be able to create our resumes based on this technical analysis. That is, it creates a resume based upon the market, the kind of jobs which is very demanded in today day-to-day life. So based upon the demands of the market, the resume of the candidate will be prepared, and there's high chances for them to get into the company based on this technical analysis. And it's really very interesting thing to know, right? And now let's get into small recap. So firstly, we have discussed about what technical analysis means, followed by the 8-step flow-like process of the technical analysis, and then the concept of support and the resistance, followed by the demo and the application part. Now these are the references which I have gone through, though Investopedia is really very interesting website if you really wanted to get know a lot about the technical analysis part. So any questions? So if you have any more queries, you can contact me through my mail ID or through my LinkedIn. Thank you. Have a nice day. I'm done with my presentation, ma'am.
So you're done?
Yes, ma'am.
So it was a great presentation, Manushri. Everything was nicely explained, thoroughly researched. Everything was great. Keep up the good work the next time as well, okay? Alright, you can stop sharing your screen. I will give you feedback.
Thank you, ma'am.
Bhavana, you can start.
Yes, ma'am. Yeah, am I visible, ma'am?
Yes, you are visible.
Good evening, ma'am. Good evening, everyone. My name is Bhavana. I am from Python developer in Python developer intern at Hackveda. My project name is developing a stock screener application using Python, and my task name is the overview of the project synopsis. Coming to my project agenda, the first one is introduction, need for automation using Python, how to use stock screener, advantages, disadvantages, and finally the conclusion. What is a stock screener? A stock screener is a tool which which enables to invest used to filter the stocks on specific criteria or specific parameters. The goal is to identify stocks that meet certain predefined metrics or characteristics. In every stock exchanger or any stock company, the the stock exchangers need to see first the stock is able to invest more profit or less. By seeing the criteria, they can invest into the exchange company. When the sellers used to sell from the investors by the investors, they can check the quality or the usage of the stock, which either they can able to sell or they can able to purchase it in the future also. Stock screeners are widely used investors to save time on stocks that align with their investor strategy. By using the stock screener, investors can identify potential investment opportunities, compare stocks within an industry or sector, and track market trends. When comparing to previous stock exchanges companies, nowadays the stock companies are improving more better by getting the apps and in which in which the applications are almost in remote, where in previous days or in olden days they used to go to the company and they need to check the quality before purchasing or before selling the stock. Nowadays everyone is becoming remote so that they can easily access and get more benefits by these applications. Here are some criteria that investors may use in a stock screener. The first one is market capitalization, that is filtering stocks based on their market capitalization. As I have said previously, the before buying or before selling the stock, we need to check the product, right? So the stocks needs to filter based on their criteria and based on their benefits in the future development. The second one is sector or industry. That is, the stocks may have a down. After selling or after purchasing, they may get down or they may get up because of the stock. Because of this company, the industry may get a good name or a bad name, right? So before getting into it, in beforehand, they used to prevent these precautions and used to purchase it. Coming to the third one, that is price, setting minimum or maximum stock prices. By first time, by investing more money, they may not get a profit, right? Then we need to balance according to the product and according to the quantity of the stock. The fourth one is earnings per share, looking for stocks with a certain level of earnings per share. The fifth one is technical indicators. The technical indicators defines that in a stock, it is a compulsory to be an indicator. That is in every monthly basis, on every monthly basis or annually, they used to check because this company is getting down or getting more profit than previous year when compared to other stocks also. The next one is fundamental ratios, applying these filters based on fundamental metrics like price to earnings ratio, that is P by E ratio, price to book ratio, that is P by B ratio, or debt to equity ratio. Next one is volatility, identifying stocks with specific levels of volatility. If you have any previous experience in that company, you can easily identify and detect which can get more profit and which cannot get more profit, so that the remaining which not get more profit can give again and can improve it more better. The next one is analyst ratings, filtering stocks based on analyst recommendations or ratings. In the stock companies, what the people used to do is, based on the purchased stocks or based on the previous stocks, what they have seen is to get ratings or any feedback from the sellers or from the purchasers that the product is having some defects or some good qualities that to improve in the next. So based on that ratings, they can improve more better to get more profit for the company or industry. Custom criteria. Investors can often create custom filters based on the specific investment criteria. Based on the criteria, they can get more profits, and the criteria should not be at a time at high. So slowly it should be increased so that the customers who are purchasing it from the exchange stock company can also get a good impression on the exchange company. The next one is need for automation using Python. In this need, first one is handling big data. Data, that is data retrieval and processing. In Python libraries like Pandas and NumPy, we use in the code to improve more and handle processing large data sets into and combine into a small data sets. In real-time analysis, automation enables quick analysis of real-time data. By using the real-time data, we can get more ideas and we can implement more on the stocks. Rapid prototyping. In this, I have quick development. Python implements fast and quick stock screening algorithms of new studies because in Python it is very easy to define and it is very easy to write the code in a short and less time, so that it can we can use in many ways to implement it. Flexibility. Python makes it easy to experiment with different algorithms and criteria. Based on the comparing to other languages, in Python, we can have more flexibility and we can change easily wherever it requires, and the data we can modify whenever it requires. Scalability. Automated process. Python allows for automation of repeated tasks, making it scalable for analyzing a large number of stocks. And the scheduled execution. Automated scripts can be scheduled to run at specific intervals. In this application, what I'm going to implement is automatic the period which the stock can run at a time, so that at a specific period of time the Python needs to run, and then it gives the output in a short period of time. The next is how to use stock trainer. First, investors must determine investment's goal and tolerance. Next, the stock screener parameters such as P by E ratio and P by B ratio capitalization. The stock screener will generate a list of stocks that meet the selected parameters. Based on these 3 steps, finally the investors can then analyze the data further and make informed decision about which stocks to invest in. Coming to the first point. First, in every company, first the investors needs to understand their goals, what the criteria and what the parameters to implement in the company or exchange stock company or industry. Next, the parameters needs to satisfy some criteria such as in some of the companies it has P by E ratio. Based on that ratio, we needs to divide the stocks, and then we needs to capitalize like small capitalization and middle capitalization. Then the stock screener will generate a list of stocks based on the criteria. Then whichever the parameters are satisfied for the stocks, the certain amount of stocks or certain count of stocks will be divided, and the stocks which are not met the criteria and not satisfying the goals will be arranged in the another stock, so that the stocks which are satisfying can be generated to the next level. Finally, these stocks which are satisfied the goals and which are satisfied the parameters, some specific criteria, these stocks the investors analyze them carefully and then they purchase to the customers. Coming to this advantages, it saves time by using this application. It investments new investment opportunities, customized filters, real-time updates, decision making. By based on these advantages, it has more benefits without taking more time. Without wasting the stock or people's time. Disadvantages: over reliance on data. That is without depending on any without depending on any stock, directly decides by the data which has given in as input. Limited view of data. That is as previously I said, based on this, the people can easily understand what is the which stock has better and which stock has does not better. Potential bias, cost, lack of flexibility. Coming to conclusion, stock screener applications are valuable tools. Investors, as they save time, reduce risk, and identify opportunities that match their investment objectives and preferences. By using these stock screener applications in the society or in any industry, they can save time and they does not have that much risk when compared to the previous exchange companies. However, investors should also be aware of their potential limitations because when the product is getting into the company, that the product is well satisfied and it satisfied the certain criteria, so that the people who are selling to the exchange company can invest more amount on that. Then the purchasers who are buying from that company can have good hope on that stock company and have more benefit in the future, such as over-reliance on data, limited view of the market, potential bias, cost, and lack of flexibility. Any questions, ma'am? If you have any questions, please drop a mail. These are the references which I used for this presentation. Thank you.
So Bhavana, you're done?
Yes, ma'am.
So you can improve a lot from your presentation. It was a nice presentation. You can, pick up the right templates or reduces the data. Keep the data up to the point. Next time,
Okay, ma'am.
you can improve a lot. All right.
Okay, ma'am. As this is my first presentation, I will improve next presentation.
Seeing your first presentation was a really nice presentation, but I can see you can improve.
Okay, ma'am.
Okay, Bhavana, you can stop sharing. I will give your feedback on your mail. Okay.
Thank you.
Okay.